So, what if I told you a stock you own today might be valued at less than 2% of where it could eventually go? I know, it sounds crazy, but that's the staggering question we're diving into today. Let's really break down what a $100 trillion Tesla could even look like. $100 trillion. I mean, just let that sink in. To put that into perspective, that's something like 65 times Tesla's market cap today. We're talking a theoretical share price of over $25,000. It sounds like pure science fiction, right? But this whole conversation actually started for a very specific reason. And there it is. The CEO of a company already worth over $1 trillion looked at a projection that would make it 65 times bigger, and he didn't laugh it off. That single response, "It isn't impossible," is what gives this whole idea a tiny sliver of credibility and honestly makes it worth talking about. Okay, so where did this absolutely massive number even come from? Well, it wasn't just pulled out of thin air. The whole origin story for this valuation is a now famous thread on the social media platform X. It all kicked off when a tech product manager named Akash Gupta posted this incredibly detailed, multi-layered thesis. He broke down, step by step, exactly how Tesla could theoretically get to that $100 trillion mark. He basically stacked several massive potential businesses on top of each other, and that detailed breakdown is what got the CEO's attention. The whole argument really rests on three key layers. And you have to understand, each one of these is a potential monster of a business all on its own. First, you've got the Robo-Taxi network. Second, the Optimus Humanoid Robot. And third, the one a lot of people forget, the energy business. So, let's break them down, one by one. All right, first up is the layer that probably feels the closest to reality. This is the foundation of the entire $100 trillion idea, a global, autonomous, ride-hailing network. The bull case math for the robo-taxi business alone is just, well, it's wild. If you slap a high-growth tech multiple on the projected revenues, you get to a potential market cap of around $40 trillion. And remember, that's just for this one part of the company. Now, this slide really shows you the two sides of the coin. The bull case, on the one hand, sees this as a $10 trillion market that doesn't just replace Uber, but replaces car ownership as we know it. Tesla's huge advantage? The millions of cars already on the road, basically acting as data-collecting robots for its full self-driving software. But then you've got the bear case pushing back, saying, whoa, hold on, 30% of a global market is incredibly optimistic, especially with fierce competition in China from giants like Baidu and Waymo. A more realistic share might be half that if they're lucky. Okay, now let's stack the next layer on top. This is where the story goes from software to the world of physical humanoid robotics. And believe me, the numbers are about to get even more ambitious. So the valuation for the Optimus robot business, it comes from this idea of capturing just a tiny fraction of global labor costs. Think about it. Humans pay other humans something like $40 trillion for work every year. If Optimus can tap into even a sliver of that, the resulting business could be worth over $25 trillion. And this, right here, perfectly illustrates the core tension with Optimus. The bull case is all about the incredible profit margins. If you can solve manufacturing at scale, you could be looking at software-like margins. We're talking 50, maybe 70% on a physical product. But the bear case is firmly planted in today's reality. The robot is still stuck on the factory floor. Demos look cool, sure, but that's a world away from commercial deployment in the real, messy world. It's the ultimate prove-it-to-me situation. All right, on to our third and final layer. And you know, while the first two are mostly about future potential, this one, the energy business, might just be the most underrated part of the whole story because it is delivering massive growth right now. So here's the crucial point you gotta grasp. It's all about the growth trajectory. So many investors are laser focused on the cars and the robots, but they might be completely missing that Tesla's energy division is scaling up at a faster rate than its iconic EV business did back in its early days. And this chart really brings that point to life. You can just see it. The energy growth curve is steeper. As the whole world shifts to renewables, the need for huge grid-scale batteries, like Tesla's Megapack, is absolutely exploding. This isn't some far-off dream. This is happening today. Now, what's interesting is the original X thread didn't even assign a specific number to this layer. But other analysts have looked at it and said, hey, the energy business could be a $1 to $3 trillion company all by itself within the next decade. A lot of investors are probably still sleeping on this part of the story. Okay, so after stacking up all of this incredible, mind-bending potential, we have to ground ourselves. We need to take a deep breath and look at the very real, very significant hurdles that are standing between today's Tesla and that $100 trillion future. And this slide really sums up the entire argument from the skeptics. Every single layer of this thesis requires near-perfect execution at a level we just haven't seen yet. Like we said, full self-driving is not a truly driverless product you can buy today. Optimus has not left the factory, and you absolutely cannot ignore the ferocious competition, especially coming out of China. A lot of things have to go exactly right. So you've got this massive potential on one side and these major risks on the other. What's the practical takeaway for anyone just thinking about the company's long-term future? Where do you land? I think it all comes back to the full context of what Musk actually said. He didn't hype it up. He was incredibly honest, saying a staggeringly enormous amount of work, and yes, good luck, is needed. For a lot of people, that measured, realistic tone is actually way more encouraging than a bunch of baseless hype. And this is the crucial point. You don't actually need to believe in the $100 trillion number to be bullish on the company. The real question is, do you believe the general direction is correct? Is FSD getting better month after month? Is Optimus actually moving from a science project to a real product? Is the energy business growing like a weed? For a lot of people, the evidence seems to suggest the answer to those questions is yes. And this all brings us to a really key financial concept that explains why this vision is so powerful. It's called asymmetric upside. It's just this idea that even if the company falls way, way short of this grand vision, the potential for huge returns still exists if just one or two of these massive layers starts to become a reality in a big way. So I'll leave you with this final thought to chew on. Of these three massive bets, the Robo-Taxi, the Optimus robot, and the energy business, which one do you think is the biggest gamble? And maybe more importantly, which one do you think has the best shot at actually succeeding? The answer to that question will probably end up shaping Tesla's entire story for the next decade.